Ever wonder how companies like Google, Microsoft, Salesforce, Infosys, TCS actually make money? It's not just code. They master a financial game with different rules. We are talking LCV and CAC and rule of 50, why R&D is the new inventory. If you want to understand the money strategies that fuel the trillion-dollar tech empire, hit that subscribe button because we are breaking down business finance in IT corporates right now. In traditional business, finance is about managing inventory and fixed assets. But in tech world, your biggest assets are intangible: code, data, and talent. That means the finance strategy is completely different. How do you finance billion-dollar innovations? How do you account for softwares you have not even finished building? Today, we peel back the curtain on how money works in the tech companies, examining the strategies, the metrics, and the mindset required for success in digital age. Let's get started. What is the finance strategy in IT companies? Finance strategy means how IT companies plan, control, invest, and grow their money to stay profitable and competitive. It's all about answering how to earn more because saving of 1 rupee is equal to earning of 1 rupee, how to spend less, right? And where to invest for future growth, how to diversify the geopolitical environments, and how to survive financial risks. Core financial strategies used in IT companies, especially for margin optimization. A lot of strategies are there, but in order to cost optimization strategy, first they focus on reduce employee workload. In any IT company, if you observe, the highest cost in any profit and loss account is 60 to 65 or max 70%. It's a human resources cost because the highest asset of the company is talented resources. So if you reduce, for example, if you are losing any kind of a project or any kind of long-term relationship with the customers, you need to fire all the employees unless you keep them and maintain them on the bench and pay the salaries for unlimited time. So no companies will take that risk. So hiring, how fast the companies will do the hiring, that much fast also companies will fire the employees if there are no projects for the company. So they first focus on reduce the employees overload in order to cost optimize and maintain the margins of the company. And using AI, cloud, RPA, robotic process automation to cut the cost. Every project in order to increase the margins and make the project at very good profitable revenue and margin, the only way they have to optimize using the artificial intelligence and cloud technologies and robotic process for routine works where humans are involved so that the cost will be reduced and profit automatically will improve. Outsourcing non-core work to low-cost regions. Absolutely. So where there is a cost less, whether it is on-site or offshore, and they move the resources to offshore in order to reduce the cost of on-site resources. Because paying $1 in US and paying 100 rupees in India is almost need to be synchronized so that in order to optimize the cost, they outsource non-core work the low cost in regions, reducing the office rent by hybrid and work from home models. The main advantage here is if you do the work from home model, the efficiency of the employees will increase and traveling cost and spending a lot of time in the traffic will be leveraged, and the cost of maintenance of the offices also will go down. The second diversification strategy is all about revenue. IT company do not spend just on one revenue source, so they expand into new countries like US, Europe, Middle East, where there is a huge money is lying and there is a huge business opportunities nowadays. The $1 trillion, $10 trillion software company upgoing in the coming future. So they estimate the future business where there is a huge money in the business, and they capture and they bring the business and with the along with the competitors world. New strategies like banking, healthcare, retail, and telecom, they focus on multiple industries, so they can diversify their portfolio and they can expand their services. Then they can sell their products in multiple industries so that they can leverage the impact of one industry in another industry so that they will keep going in the competitive world. And new services like AI consulting, cybersecurity, and cloud migration. These are very important and upcoming uh, game changing technologies, and every time they have to adopt it. If you forget to adopt it, and you won't be there in the competition. Creating own SaaS products or platforms for recurring revenue. For example, HCL, they acquired a lot of companies in Europe and America, because even though the company is based on service company, but they want to develop parallelly the product business as well, and they maintain a lot of platforms, just like Infosys maintain the financial banking products. HCL has a certain kind of a products which acquired from the foreign companies, and they sell the products along with their services so that they can leverage their revenue in the downfall series, and even in fluctuations, any kind of recessions or global impacts, they can always be stable. Pricing strategies for projects. So they carefully choose about which pricing model they have to apply. So fixed pricing is suitable for certain kind of project like a maintenance product, or for predetermine the cost for the whole project and risk on the company. But even though they are ready to take the risk because of leveraging multiple factors of resources and on-site mix and jail mix and offshore percentages changes, this and all they will calculate internally, and they'll give the fixed pricing. On certain kind of projects, time and material pricing is more suitable. For example, if there is any research and development or any development of applications, client will take the resources and use them for production. So here client pays on hourly basis and resources used. Outcome based pricing. There is a win-win situation in outcome based pricing in most of the cases. Client pays only if results are achieved, costs saved, revenue increased. So this kind of percentages, there will be high risk and high reward for the both the parties. And subscription or SaaS model, software as a services models they can use their monthly recurring fee for using the company software. For example, you have built a software. For example, HCL built one software and they are using the software for client purpose, and they give that one as a license subscription model, and every month you will have a fixed income from the licenses. Based on that, they calculate annual recurring revenue based on the contract period of the project. This will definitely protect the income based on the duration of a contract signed with the customers. So this will give you more confidence to the investors, stakeholders of the company, that company has a fixed income and for a next 12 months, because based on the signs or contracts or licenses or subscriptions extended for the period of 12 months. Profit management strategy, controlling salary cost through pyramidal staffing structure, more juniors and fewer seniors. Because highest cost is lies at the top. More seniors, SVPs, VPs of the company have more cost to the company, and actual deliverables usually happens at the bottom, juniors and fewer seniors, and increasing the billing rate per employee. They have to leverage the cost in order to manage the cost and billing rate per employee to the customer and improve the utilization rate. When the utilization rate goes up, ensuring employees are allocated to billable projects, the overhead cost will automatically go down so that they can use the billable resources, they can recover the cost incurred for the project from the customers, and upskilling the employees instead of hiring new ones to reduce the hiring cost. Nowadays, the recruitment cost in IT companies is very huge because of high attrition of the employees. So instead of doing that, they can upskill the employees and retain the employees through retention bonus or improving, upskilling their skills so that they can maintain the employees. That way, they can reduce the cost and maintain the profit and improve the margins. Investment strategy. Where do IT companies invest their profits? Basically, upcoming technology, where entire world is changed by AI, cloud technology, cybersecurity capabilities. Acquiring small startups, companies, mergers and acquisitions is the critical key parameters for investments. In order to acquire the companies, you need the huge cash reserves as well. So when you invest in upgrowing companies, acquire the more startup companies, that will multiply your income and multiply your margins and diversify your portfolio. So you are not only doing the services business, and parallelly you are stabilizing your product business as well by acquiring the small products and selling the products along with the services business. Investing in R&D and D and innovation labs, this is very critical for any IT company. Unless you know where you are, you don't know where you want to go. So you should know that one, where is your market, how many customers you are retaining, how many new customers you are capturing in the market, right? These kind of researches and developments, and what are the 5 years down the line, changing the market structure, changing the IT global environment, where you need to invest, research, and adapt those changes in order to sustain in the competitive world. And employee training, certification, and leadership development. This is very, very critical. You need to invest in the employees in order to maintain the employees, because the highest resource skill of the company is not their inventory or fixed assets, it is the talented resources. That is the reason you are generating the income in the tech world. So in order to maintain that talented resources, you need to invest in the resources and you need to develop the leadership so that you can survive in the competitive world. And global expansion, new offices in USA, UK, Europe, Middle East, the local offices will be more compliant and competitive to capture the business from the customers and in order to meet the compliance process. So there where companies always look for tech world, it's not only the intangibles, and it is all about the coding, data, and retention of the talents. In addition to that, there is a lot of risk management strategies where each and every IT company has to follow, because most of the IT tech world revenues, contracts will happen in the USD dollar terms. So in order to protect the fluctuations, you need to always hedge the contracts and revenues what you have. And the client dependency, no single client should give more than 10 to 15% revenue. So you should make sure that one, you need to assess the risk of the client time to time and protect your financial health and make sure if required provisions are provided in order to protect the interest of the company. And position planning, cutting cost and freezing hiring and improving automation. This is where saving of 1 rupee is equal to earning of 1 rupee, and where all financial experts, especially like chartered accountants, plays a very critical role in order to optimize the margins and reduce the cost and improves the revenue. And data security and compliance risks, avoid legal penalties. Most of the companies gone bankruptcy if they avoid data security and compliance risks we have seen in the history. So this is very important legal risks, and company has to comply with the local laws when they are doing the global businesses. Tools and techniques used especially in the financial strategy. So SAP, Oracle Finance, this is the purpose for accounting and financial management. And the end of the day, entire business is all about the number game. Need to measure it time to time and take the decisions quickly to manage the company in the right direction. Power BI and Tableau. So this is for the purpose of financial data validation and forecasting. So unless you know where you are going, you cannot define your destiny. So that you need to always visualize the data and the forecasting. Zero-based budgeting. Every rupee spent might be justified. For example, if you are spending 1,000 crores in a year on the budgeting for the resources on a project, at the same time, each rupee spent should be equal to where you are earning the rupee. Your revenue should be equal to spent. So this need to be justified. Otherwise, the finance expert cannot manage the overall strategy of zero budgeting at all. And scenario planning. What if revenue drops by 10%? What if revenue goes by 10%? What is the worst case scenarios if some unfortunate situation happens? What are the provisions impact? Are we really protected or uncertain risk provisions? So these and all financial expert strategies they have to build every day, every month, every week, every quarter, every year. So these protections make sure that when the revenues, cost, margin analysis, all things are protected in the right way. Unless you do these kind of reconciliation time to time basis, the nobody can rely on the financial statements of the company. And balanced scorecard, measuring the financials, customers, and employee performance at an optimized level so that you can review and you can really help the management in decision making matters in terms of future growth planning and budgeting and forecasting of financial matters. Finance strategy is the highest financial engineering behind IT companies happens for management decision from time to time. Stay profitable even during global slowdown. It helps the management to predict what are the future uncertain possibilities that may hit the company and invest in future technologies like AI, cloud, cybersecurity always helps the company to beat the competition and survive in the global business and expand globally and win billion-dollar businesses. So billion-dollar deals, if you want to win in the competitive world, you need to manage all the parameters of resources, contracts, revenue, management, competition, technology, automation. So everything you need to leverage in order to meet the global expansion and the growth and protect jobs, pay salaries, reward stakeholders. This is the ultimate goal of any company. At the end of the day, the stakeholder should be very confident, happy in terms of what the investor, the stake in the company. So, in all these parameters, the finance strategy plays very critical role in terms of revenue, expenses, expansion, forecast, and future goals of the company. There, where financial experts like chartered accountants plays a very, very critical role, and they guide the management to take the right decisions at the right time to make the company and go in the right directions and survive in the future. Thank you.